Hi. Yesterday we had witnessed a very strong bearish tone in the market, and if you look at all the indices, mostly the PSU banks lost around 4.5 percentage, and most of the small banks gave up last 2 week of gains, and doesn't seem very good at this point of time. And the best way to uh, protect your cash is stay away from the market for at least 1 or 2 weeks. And today, even if there is a pullback rally, investors will still get an opportunity to offload existing positions. I would say, again, reiterate that, 30 percentage of positions can be exposed mostly to big caps in selective stocks, mostly the stocks which have gained yesterday. And there are few stocks which even are doing good, even in a market like this. One is BASF. Another is Amrutanjan, but if you have not entered those stocks earlier, if you have to still take fresh positions, it is very wise to take them, deploy those cash only in stocks which are bound to not lose at least. One is MRF, another is Apollo Tires, and there are uh, certain stocks like Astral which are just breaking out from a consolidation. And Apollo Hospital is at again all-time high. And these are some safe stocks, and the best out of them is Wipro and HCL. So these are certain stocks which you can consider deploying your cash if at all you want to stay invested in the market. But even that is not recommended because once you lose 20-30%, it is very hard to gain them back. Suppose if you have invested 7 lakh and it becomes 10 lakh in a span of 2 to 3 months, and 30% dent is like you have to again gain 50% just to recover those losses, and that will take another 3-4 months. So you will be still in the same place. Instead, if you have cash, you can make 10-15 percentage after the fall when doing the pullback or whatever, and that can keep your account very healthy. So Arrow Pharma is like certain pharmaceuticals are really good. Again, then not for everyone. You have to be very watchful during the whole intraday, and especially watch the close every day, because the Indian market is going through a correction at a point when the US markets are making all time highs, and especially the Russell. So, the Russell 2000 index is actually recovering, now coming back very well. Actually, after a consolidation, like we are seeing higher lows, and this is a kicker candlestick pattern which is very powerful. We don't get that very easily. Like 3 days of gap up opening and uh, low near the opens and high near the close, that is very rare for indices, and we haven't seen that in the US markets for quite some time. So the last time it was in January 2023, and then the market went up uh, like 10 percentage. So this can happen. So the situation could be like this. Most of the FIAs are pulling funds out of India, and they are seeing more opportunity in US, and that could also trigger further selling. So in any way, there is no advantage being invested in India, at least for 2 to 3 weeks, where the pain will be the most. After that, a consolidation might be expected, and once you feel that the momentum, the bearish momentum is losing that uh, steam, then you can deploy your cash. Mostly the PSU banks and PSU sectors will attract more funds even after correction. You can consider reinvesting in those stocks. They may be overvalued or whatever, but considering the historical returns that they have generated, they are still undervalued compared to the other companies in the other listed companies. So it is wise to stay in cash. That is what we reiterate again. You may listen to a lot of news articles or like over talks, but the bearish momentum is so strong that even after a pullback, if you are seeing a lower highs, that is the time to actually liquidate your positions. So there are thousands of Telegram channels, thousands of Twitter handles, which actually give out stock recommendations every day. but no matter what, the probability of your success rate will considerably decrease in the next few sessions. So that's our take on the markets today as well. The opening can be very good even today, but that should not actually pull you into the markets, and you can consider liquidating that whatever positions you have, even if it is like 5% 10% loss. It is wise to liquidate them, stay for opportunities, stay in cash for 2 to 3 weeks. It is not a big time. Don't go uneasy and get into the market again and again and burn your fingers. We will again, we will look out for opportunities in the market. We will discuss the charts and everything, but this is how the market looks right now. Thank you very much. We'll meet tomorrow.